Why should I invest? Meet Little Louie, one of the hardest working guys you'll ever meet. Picture this. Little Louie working in a factory making cable ties by day and moonlighting as a lawnmower man by night, all to support his family. He'd tuck away his extra cash in under his mattress in a bank account that might as well have been a piggy bank for all the interest it paid. When Dollar Dan decided to dive into the stock market, Little Louie thought it was a one-way ticket to Riskyville. But here's the kicker. Little Louie was playing a risky game himself without even knowing it. Inflation was sneakily eating away at his savings every year. Spoiler alert, Little Louie never got to ditch the factory gig. The idea of my money being devoured by inflation terrified me, so I made sure to invest. Now, not only have I beaten inflation, but my investments are like a well-trained puppy, growing thousands of dollars every week that over my lifetime will turn into millions. Now, in order to make this happen, I had to learn the principles of investing. And for that, I recommend Road to Successful Investing. This is a stock investing guidebook, priced at just $39 that covers everything you need to know before buying your first stock. There's 15 beginner-friendly chapters and a 60-day money-back guarantee. It's a risk-free way to start your investment journey. Plus, you can preview the guidebook before you buy. I'll leave the link in the description below if you want to check it out. Now back to the video. I'm no financial guru, but I've been around the block. That's why I'm here, to give you the advice I wish I'd had when I started. How can I make money investing in stocks? First things first, beating inflation. Over the past 60 years, inflation has averaged out to about 3.8% per year. So if your money isn't growing faster than this, it's essentially shrinking. Ideally, you'd want a savings account with a return of 8 to 10% per year, but those are as real as unicorns. Enter the stock market. Owning a stock means you have a slice of a company. There are two ways to profit: selling it for more than you paid if the price goes up, or raking in dividends, regular payments to shareholders. Not all stocks pay dividends, but when they do, it's like finding cash in your winter coat pocket, and I will touch on that in another video. The magic happens when you own multiple stocks that grow, on average, by 10% a year. That's compound interest for you. Let's play with some numbers. Investing $250 per month at an 8% annual return? In 42 years, you'd be a millionaire. Do it for another 10 years, and you've got over $2 million. When should I start investing? Short answer, ASAP. The younger you start, the better, thanks to the wonders of compound interest. You can also afford to take more risks because you have time to recover from any market dips. But before you dive in, make sure you've paid off high-interest debt and built up an emergency fund to cover 3 to 6 months of living expenses. If you're under 18, ask your parents about opening a custodial account. How much should I invest? People often say, invest as much as you can, but I say, invest as much as you're comfortable with. The 70-20-10 rule is a good guide. 70% for living expenses, 20% for investments, and 10% for fun. This balance keeps you prepared for life's ups and downs while still growing your wealth. How do I buy a stock? There are tons of apps for investing in stocks. I'll link some below. The key is to open the right type of account, like a Roth IRA in the USA or a Stocks and Shares ISA in the UK. These accounts offer tax advantages but have limits due to their power. These apps also let you buy fractional shares, so instead of needing $190 for a full share of Apple, you can start with just $1. One of my favorite platforms is Trading 212. They even let you practice with fake money and offer a feature called Pies to see how other investors allocate their money. How do I pick the best stocks? Two main strategies: technical analysis, short-term, and fundamental analysis, long-term. I focus on fundamentals like financials, leadership, and brand recognition, investing with the intent of holding for 2 to 5 years. But most of my money goes into index funds, which track a basket of stocks. This diversification spreads the risk and has historically offered solid returns. What's a stock index fund? Think of an index fund like a sports league table, but for companies. For example, the S&P 500 tracks 500 of the biggest public companies in the USA. You can invest in all these companies with one click, balancing out the risk. Over the last 10 years, the S&P 500 has averaged a 13.6% return annually. What's the best index fund to invest in? These are the 3 types I recommend. 1. S&P 500 Index Fund. Historically, 8 to 10% annual returns. 2. Total stock market index, diversification at its finest with a 13% average return over the last decade. 3. Emerging markets index, higher risk but potential for big gains. Includes stocks from growing markets like China. Is investing risky? Depends on how you define risk. Not investing is also risky as inflation eats away at your savings. A diversified portfolio of index funds coupled with bonds as you approach retirement can help weather market storms. When should I sell my stocks? If you're young, there are only a few good reasons: an emergency, a bad investment, or achieving a specific goal. Otherwise, the best strategy is to invest and forget about it, letting your money grow over time. If you still have questions, make sure you check the link in the description below for a comprehensive ebook that will kickstart your investing journey the easy way. Let me know in the comments below if you've started investing yet. If not, what's holding you back? Don't forget to like, share, and subscribe to keep up with all the tips and tricks to grow your wealth. See you in the next video.